Good evening and welcome to my midweek recap here for the S&P 500 and plan ahead for the rest of the week. Quick recap, I am in these 21 September 287s, 16 November 320s, June 2019 325, still holding. With all that in mind, Tuesday on this nice little pop-up higher, I did lock in some of those profits on the 287s just to take some off the table. Had a nice move up, got my average down decently low from where I ended up getting into the position. On Tuesday, once price action gap below, anytime a position gaps against me, I will never immediately close. I want to see what kind of price action that creates. And based on what had happened here on Friday, it's a very, very big, strong, bullish looking candle at lows, at support. As long as we stayed above there, I was okay with adding into that position. So it worked out well. Today we had a lot of chop back and forth. I don't know if there was news that came out or whatever, the Apple event. I'm sure that didn't have a whole lot of effect on the market, but just some things that were going on. Had some decent volatility, nice little moves up and down here through the day. Still nothing told me to get out of any of these positions. If price action starts to roll down, I will most likely close out my position below this 288.5, 288 level because it'll most likely come down here and test this same level again. And at which point, let me go over here to my trade plan. I'll be looking for 288 calls in this region, anywhere from this yellow line down here to this prior support, even further down here below. Still going to keep some of these same plays. 50 SMA, I'll go at the money and further out in the future. And the 200 SMA again way down here, 275 calls 4 weeks in the future. Okay, that's the intraday time frame. Now over here on what's going on in the month. This is a historical view of the S&P 500. We're just going to disregard all this because all the significant volume started about 2008. As price action goes up, it doesn't necessarily need as much volume to move the price, simply because it takes a lot of participants out of the market, it's higher priced, and it just doesn't take as much pressure. So price action is going to keep doing what the algos want it to do. They have it down to a mathematical science, how much and exactly where to buy, how much to buy, where to sell, and how much to sell in order to maintain a trend. Once these algos are programmed for the highest probabilities, you can see the trend is up. So why would you program anything to go against it? So regardless of fundamentals of the markets, what's going on in the world, my opinion is the S&P is still going to go up and continue to go up until there's some sort of huge event outside of the markets that has an effect. Here on the monthly time frame, a few times, nice trend up, pull back, nice trend up, pull back, nice trend up, dip, and straight up. 2014 to 16, we consolidated. This was not a bear market. Since then, we've been in a very strong uptrend. And what's this look like to me? Hopefully it looks like to a lot of other participants is a continuation pattern. Not a reversal, not a top, but likely a move higher. We've now broken above prior all-time highs. As I zoom in here a little bit here on the weekly time frame, nice break above weekly highs. And where did we come back to the past couple of days? Almost to the penny, 286.85. Down further into the daily time frame, yesterday's candle was very strong on about average volume. Today had a lot more volume in an indecision candle. So whatever happens tomorrow on Thursday, a break outside of what's the high here, 289.80 and 288.23 for the low, outside of this candle will probably lead to a significant move. If it goes down, I stop out, I wait, and I buy my supports. If it goes up, I'm still right, I hold my position, and I make a lot more money, and we take out these all-time highs here in the very near future. My money and my trades are on this making another all-time high in the very near future and continuing the run up into over the 300s, I say the 330 to 340 mark. I'm not going to go over the W pattern because it's pretty much already played out and there's no really no need to beat a dead horse on that. So if you have any questions or comments, feel free to leave them down below. Come join us over at the Trade Crew chat room. It is a free chat. Have a good evening and good luck tomorrow.